Welcome. In this video, when will Xcn coin price be bullish? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A careful examination of the chart shows that the price has recently formed a new downtrend structure. Such falling trend structures usually signal a certain correction process in technical analysis. However, what should be emphasized here is that this downtrend has the potential to break structurally. When this potential breakout occurs, it becomes a highly probable scenario that the price will move with a strong upward momentum again. This is because falling trend lines are technical structures that indicate that the price has been under pressure for a while, but that this pressure is now coming to an end. Breaking such trends means not only that a resistance level has been breached, but also that a significant shift in investor psychology has occurred. While the current downtrend reflects pressure from the previous highs, it also shows that this pressure is starting to fade and that the price is preparing to push these limits. This is because the trend line weakens each time it is tested. Currently, the price is very close to this trend line and is on the verge of an upside breakout. An increase in volume or a positive news flow at these levels could cause this trend line to break to the upside. If this breakout occurs, there will be technically far fewer obstacles for the price to head higher again. This is because a downtrend break usually triggers a new wave of buying in the market. Such downtrends have a greater psychological impact than technical analysis. Many traders prefer to remain cautious when the price is in a downtrend. However, when the trend line is broken, some of these traders are tempted to buy in order to seize the opportunity. This sets the stage for a rapid upward movement in the price. In addition, since algorithmic trading systems and professional traders also consider such breakpoints as buy signals, sudden and sharp bullish movements can be seen after an upward break of the trend line. From this point of view, if the current downtrend breaks, there is a possibility of a remarkable rise not only technically, but also in terms of volume and volatility. When we look at the technical structure of this downtrend, it is observed that the tops are descending with a certain slope, and the lows are moving downwards. However, the important point is that the last low is less deep than the previous low. This is another important signal that the bearish momentum is starting to weaken and sellers are losing their strength. As the selling pressure gradually diminishes, it sets the stage for buyers to step in. Therefore, if this falling trend line is broken, it would not only signal the start of a new uptrend, but also a strong indication that the balance of power in the market is shifting in favor of buyers. On the other hand, such downtrend breakouts can often be followed by a pullback called a retest. This is a test of the broken trend line as a support. If the price returns to this broken line and starts an upward move again, this confirms that the breakout is valid and strong. This second move after the retest is usually more decisive and voluminous. This may cause the price to move to higher levels. Therefore, for investors, the breakout and retest process should be evaluated together, and this technical structure should be considered as a whole. But we cannot decide the analysis only with trends. Let's look at other metrics. Keep watching. When we carefully examine the chart, a very critical support line stands out. This level has been repeatedly tested by the price in the past, and each time the downward movement has been limited as buyers stepped in. In technical analysis, support levels represent areas where the market is psychologically and structurally strong. Such support levels are areas where buyers are concentrated, limiting the downward movement of the price, and are often the starting point of trend reversals. This support level seems to have worked exactly according to this definition. When we look at the recent price action, after the decline towards this support line, the price briefly dipped below this level. But this sag was not permanent, and soon the price managed to rise above this level again. This is called a false breakout in technical analysis, and is usually a short-term move that tests market participants, leaving them uncertain about the direction. However, the main point to note here is not that the price failed to break the support level to the downside, but that it managed to rebound strongly after testing this area. Such movements indicate that the support zone is now even more solid and provides a much safer ground for the price going forward. Support levels are not just flat horizontal lines. They are also important technical structures that reflect the dynamics of the price and the collective reaction of market players. In particular, price movements that settle back on support after such a false breakout are also considered as support confirmation in technical analysis. This is a very positive signal for investors, because the fact that this level has not been broken permanently, despite the price sagging downwards, indicates that the market recognizes this area as a strong buying zone and that buyers are seriously engaged here. This means that this support line has now gained a much more solid structure, going beyond its previous importance. At this point, the volume that occurs when the price sags below the support level is also important. If there was low volume during this sag and then increased volume during the upside rebound, this confirms that the upside move is healthy and strong. Low volume sags are often considered short-term manipulations to mislead the market and are seen as short-term volatility rather than a permanent trend change. In such cases, when the price breaks below support and rises back above it, it means that the support level has been tested and confirmed. This means that the support level will now be taken more seriously by many more traders, and the price will react more strongly there. In such a structure, the increased strength of the support level is of great importance not only from a technical point of view, but also from the point of view of investor psychology. Because after such movements, investors start to see that support zone as a safe haven. Therefore, they take positions much earlier in case the price approaches this support level again, and thus, the sales coming to this area are met with more effective purchases. This makes it easier for the price to move up again. The fact that this support level has previously worked as resistance makes this structure even more meaningful. In what is known as a role reversal in technical analysis, levels that previously served as resistance begin to work as support after they are broken. If we examine the chart carefully, we can see that the RSI, the Relative Strength Index indicator, has a very prominent uptrend structure. This rising trend line is not only aesthetically pleasing, but also serves as a critical reference point for technical analysis. This is because such trend lines on the RSI provide valuable information about the direction and strength of market momentum, and are also important tools for predicting the future of price action. This rising trend line makes it clear that the lows formed on the RSI indicator are forming higher and higher over time. This is an important sign that market participants are buying more decisively on each pullback, and that the overall balance of power is shifting in favor of buyers. The fact that the RSI has previously reacted to the upside every time it approached this rising trend line clearly shows that this line has now become a support structure that is actively followed and valued by market participants. In technical analysis, trend lines on the RSI often work as support or resistance. In this context, the ascending trend line seen on this chart is a strong dynamic support for the RSI. It has been tested several times before, and each time it has worked successfully, making it clear that the RSI is resisting downward pressure and then gaining positive momentum with upward movements. This suggests that the buy side remains strong in the market, and that earlier declines are being treated as buying opportunities. Another important feature of rising trend lines is that they increase in reliability over time. The more this line is tested on the RSI, the more market participants have faith in that level. This uptrend should not be broken. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.